Wall Street just got a major boost after a surprise Supreme Court decision. Tech giants are pouring billions into India's AI future. And in crypto, one of DeFi's biggest platforms is showing serious cracks. Today, we're connecting the dots because these three stories together may signal where markets are really headed next. So let's break it down. Let's start with the markets. U.S. stocks ended the week higher after the Supreme Court threw out key Trump-era tariffs. On the surface, this looks like a straightforward win for investors, and in the short term, it is. Why markets reacted positively? Markets hate uncertainty more than almost anything else. The tariffs had created ongoing legal and trade uncertainty, especially for multinational manufacturers, import-heavy retailers, global supply chains. When the court stepped in and removed that policy overhang, investors interpreted it as a reduction in trade friction risk. That's why we saw the Dow climb, the S&P 500 gain, and broader risk sentiment improve. But here's where the deeper analysis matters. Why the rally may be fragile. This decision does not mean trade tensions are gone. In fact, President Trump has already floated the possibility of new blanket tariffs, including proposals for broad global import taxes. What does that mean for investors? It means markets may be celebrating today while underpricing tomorrow's policy risk. Historically, tariff uncertainty tends to increase market volatility, pressure multinational earnings, and strengthen the US dollar temporarily. So the key takeaway here is the rally is real, but it may be built on unstable policy ground. And that brings us to the next major global shift. But there's also a market angle investors should watch closely. At the recent India AI Summit, global tech giants signaled tens of billions of dollars in planned investments into India's artificial intelligence ecosystem. We're talking about commitments and expansion plans from companies like Microsoft, Google, Amazon, and other major cloud and AI players. Why India is suddenly an AI hotspot? India is positioning itself as the next major AI hub, and strategically it makes sense. Here are the structural advantages driving this push. 1. Massive talent pool. India produces millions of engineering and tech graduates every year. For AI companies facing talent shortages in the US and Europe, this is extremely attractive. 2. Lower operating costs. Training AI models and running data centers is expensive. India offers significantly lower infrastructure and labor costs compared to Western markets. And that's a trend worth watching across the entire crypto sector. One of the biggest decentralized lending platforms, Aave, is dealing with what many in the community are calling a governance civil war. The immediate trigger, a key development group, BGD Labs, is stepping away amid disagreements with Aave Labs and the DAO. Why this matters more than it sounds? On the surface, this may look like just another crypto governance dispute, but the implications run deeper. DeFi protocols rely heavily on core developers, community governance, and coordinated upgrades. When key technical contributors walk away, it raises questions about protocol stability, upgrade timelines, and long-term competitiveness. And the market noticed. The Aave token dropped following the news, a reminder that governance risk is real financial risk in DeFi. And the bigger structural issue. This situation highlights a persistent tension in decentralized finance, decentralization versus coordination. True decentralization is powerful, but it can also slow decision-making and create internal conflict. Now let's zoom out. At first glance, these stories seem unrelated, but they actually point to a common theme. Markets are entering a new phase of structural transition. We are seeing policy risks still driving short-term market moves, AI investment reshaping global tech power, and crypto projects facing maturity challenges. In other words, the easy post-pandemic rally phase is over. Markets are becoming more selective, more geopolitical, and more dependent on execution quality. So here's the key question investors should be asking. Are we witnessing the start of the next major market cycle or the early warning signs of increased volatility ahead? Let me know what you think in the comments. If you found this breakdown helpful, hit like, subscribe, and I'll see you in the next Finance Buzz update.